Hey everybody, this is Nate Smoyer, and you're listening to the Tech Nest Podcast. This is the show where we sit down with the leaders in real estate and technology to find out what they're doing to transform the way we buy, sell, and invest in real estate. If you've got an interest in real estate and technology, stick around. You're in the right place. All right, we got Sam Viskovich from Reonomy. He's the VP of marketing over there. They're doing some big things in commercial real estate, tech with data, some machine learning. I don't want to give it away, but I can tell you they built an incredible moat around their business, a really fascinating story of super fast growth. They're well-funded. I'm just going to stop it right there. Let's get into the show. Well, hey, Sam, welcome to the show.
Thanks for having me. Excited to be talking here today.
Yeah, well, I appreciate you taking aside the time. I know that you're on the East Coast, so it's a little bit later for you than it is for me here, but excited to have you here and talk about what you're doing over at Reonomy. And before we really even get into the details of anything, why don't you go ahead, let everyone know who you are and what you do.
Sure. So I'm the Vice President of Marketing here at Reonomy. And in that role, I oversee all things marketing as well as the sales development team. Reonomy, for those aren't familiar with it, is we consider ourselves the largest commercial real estate data platform. We track 54 million properties nationwide, so anything outside of a single family home, we define it. And that's across 3,100 counties. We track building information, sales information, debt information, ownership information. For the most part, we've got it here. And Reonomy is a 6-year-old company, and the last couple of years have been really exciting for us. We've expanded from New York to nationwide and had a huge amount of growth. That's the sort of cliff notes of Reonomy. I think the other part that's worth mentioning is, to date, we've raised about $68 million in funding.
Mm-hmm.
That's come from the likes of SoftBank, Sapphire, and Bain. So hopefully that does some justice to what I've been doing here and what we're doing here at Reonomy.
Yeah, you guys are just a tiny little startup in a garage somewhere, huh?
Nailed it.
No.
The Empire State Building, as we say that. So
no, it sounds like you guys have really actually hit a good stride, and I want to talk about the growth there because obviously commercial real estate tech has really hit a growth spurt. So you guys have positioned yourself well prior to that. We'll back up a little bit from there first. If you could help boil it down, what is really the big problem that Reonomy solves?
Yeah, so I think, if you take a step back and you look at the different, financial markets or major asset classes, you look at equities, you look at debt, you look at real estate. Real estate is really the most inefficient market when it comes to information, and specifically commercial real estate. You've got information caught up in so many different pockets, whether that's at different geographies or with different people. And for a long time, that information has been the strength of many people within the industry, being able to collect those. So Reonomy is in that word, democratizing the world of commercial real estate data and making it accessible for all those individuals that are involved with commercial real estate. And we can go into the type of people that are using this data now, but really at the forefront we're making commercial real estate information far more accessible for everyone, and to both make better decisions and to identify new opportunities.
Yeah, and this gets further highlighted. I mean, the further you go into, I guess, like the professional side in real estate, you see like just the segmentation of data. I mean, everyone has their own way of classifying, every city itself has its own way of classifying, building types and zoning. And then you've got, who knows what the appraised values are, who knows what the true vacancies are. Everyone's got their own little index. So it gets complicated pretty fast then, so then you guys, you're working with all this data and, obviously then, it's only as good as people can use it. Mm-hmm. So how does it work? Like how are people actually able to leverage the technology you guys have built for their investments and business decisions?
Yeah, so it's a good question. And there's two sides of Reonomy, and they're two very different sides. the majority of our users are using a web application that you can access online, whether that's your mobile phone or on your desktop computer. And that's a really easy to use web app. You can search with 200 plus filters to quickly find opportunities. And we've got roofers, we've got cost segregationists, we've got mum and pop investors using that web app. You name it, they're using that. The second side, Reonomy, is what we call DaaS. It's a new buzzword, but I think you hear a lot more of it. It stands for Data as a Service. And that's when we're working really closely with big enterprise clients, and we're helping them, one, consolidate their data in the same way that we build our own data, and secondly, expand their data. And the type of clients there, you can think of like WeWork, Newmark, and then there'll probably be a few other big ones we're about to announce next year.
Well, that sounds really interesting. So, okay, obviously then, there's two sides to this, but who are the people actually using Reonomy? I mean, is this just going to be brokerages, or are there, I mean, you mentioned some like mom and pop shops there. So like, are you able to say like an example of who some of your customers are?
Yeah. So I think the one thing I added, it's the most interesting thing I've found at Reonomy is the diverse set of people that we sell to. And, you can probably judge by my accent. I'm not from the States, I'm from New Zealand originally. And coming to Reonomy just made me realize how big the US is. So there's one type of client I always like to mention on the web app because I think it paints this picture so well. We have these folks we call storm chasers. And they're people that fix after weather damage. So what they'll do, and it's huge industry, huge. You've got public adjusters, roofers, insurance, massive ecosystem around commercial real estate affected by weather. What these storm chasers will do is say a hail hits in a hailstorm in Texas or a big hurricane in Florida. They'll draw on the map on our web app the area where it hit. They'll filter, say, multifamily properties. Maybe they'll say roofs that, buildings that were built between this period. And then they're going to export that and contact all those owner information. So it's the type of people that we never thought would use the platform. And then, but some solid users. So there's kind of, I guess, three, I break it down to a third. A third are service providers that are really looking to prospect and contact. And we're almost become the de facto tool for sales and marketing and commercial real estate for them. The second lot is investors. So, look, if there we're facilitating off-market investing. So we can talk about what's the value in being able to do deal making through off-market, but we make it really accessible that if you're a full-time dentist, which we have a user of, that wants to buy, a triplex or a quadruplex, you can use us on the off-market side. And then the last third is really what you call, like you mentioned, the traditional CRE. It's the brokers, it's the appraisers, it's the originators, the debt brokers, those type of people. But look, I can never stress enough how diverse the set of users we have are. And as a running marketing, it definitely makes my job a little harder, but it also makes it really exciting at the same time.
Because as marketers, we like to build a persona. We like to say, like, our user is 30 to 55. They make 150 to 200 a year. And it sounds like you're dealing with, it could be an office, it could be a professional, it could be a hobbyist. They could have a trust fund, and now they're just looking for somewhere to put it,
Yeah, it's tough, and really almost on that side of the business, it's becoming more like the Zillow for commercial real estate, just how diverse and how accessible that user base is.
Is that a tagline you guys are comfortable going with, the Zillow for commercial real estate?
No, I'm just sharing that one with you, Nate. I was testing it out here to see the reaction I get. But no, it's not the best example because we're not like for like, but it's on a happy medium of where I feel like you can start to explain what we're doing on that side of the business.
Yeah, no, I think that's very cool. So obviously there's got to be some secret sauce, some special sauce to be able to pull off something like this. So I'm curious what sort of competition you guys actually have, because I can't imagine there's all that many companies out there with this level of competency. And, why are people choosing to use Reonomy instead of something else?
Yeah. So I think there's a couple of points there that I can to touch on. One, like the data space, there are other players, and there's always going to be people that do bits of what we do. Like we compete on the debt side with different people than we compete on, say, data in California. But I think the real difference with Reonomy comes back to how we collect our data and where that gives our advantages. So there's other people in the space that you would know of that have 1,000-person call center, or they'll manually collect this information. With Reonomy, we're combining public and private data sets together, and through technology like machine learning, combining those different data sets together. So that means a couple of things. It means that through a technology-driven approach, we can collect far more data than anyone else can have. 54 million properties, the closest next to us is 5 million.
Wow.
It also means we can update our data on a more frequent basis because we're pulling direct from private public data sets. It allows us to keep adding continuously to our data sets. So, like today we just rolled out pre-foreclosure data. You get a new data set, you bring it into the product. We're going to roll out, recently we rolled out opportunity zone data. It's very easy for us to continue to scale out the data we have through our approach. All in all, I think it just makes us the most comprehensive database.
I have to laugh, and I'm going to acknowledge this for those listening to the show and not watching. Both Sam and I are giggling a little bit here, kind of chuckling because in the background, my dog just decided to prop himself up on the in the shot here. It's a cool looking dog. So that's a lot of data. I'm curious, are you able to say who some of your data partners are, who you're working with right now in the industry?
I can't actually say that on the private side. What we're in the process of is what I call the Reonomy partner network. So, and I think I can probably take this another way that will help explain it better. But there's different private data partners that are people that specialize in company data. There's people that specialize in people data. There's people that specialize in title companies, real estate data. There's a very diverse set of private data partners that we work with there, as well as on the public side, every Secretary of State, every local assessor, every clerk. So I can't give you the exclusive on us announcing all those partnerships, sorry, but we'll put a big push on that. But I think what's worth explaining and what's different about Reonomy is how we stitch all the data together. So when I mentioned before, machine learning allows us now to combine different data sets together that never was possible before. And we're looking for a better term of what to call this, but so I'll take any crowdsource ideas. But what we do is we stitch all this different data into what's called a Reonomy ID. And that allows different data that has different syntax or language to it to be able to talk to each other. So I can give an example here. I'm at 767 3rd Avenue. Some people name this asset 48th Street. Some people will say it's New York, New York. Some people will say it's New York City, New York City. And that meant that real estate data couldn't really talk to each other that well. Through our Reonomy ID, our machine learning algorithms, we've been able to consolidate data much better and bring it together. I'm not an engineer by background, so I'm not sure if I've explained that too clearly, but let me know if I can clarify that first.
No, I think that's great. I mean, my first thought was it sounds like quilting. You're taking a whole bunch of different patches and bringing them together to make one blanket.
There's the Reonomy quilt. That's what I'll.
Boom! There, we've just named it.
The Reonomy
Debuting
quilt.
Today, Reonomy quilt. Get it today. No, I see. That's those are the little nuances that, like, even just the city name, like for New York City, obviously is like for the U.S. It's the mecca for commercial real estate. It's where a lot of the most forward-thinking and innovative ideas are coming out of, and your problems are also very complex. They're just, you have so many issues, and so it's just dramatically different. So I think that just highlights how complex. Now you're doing this across many different cities and many different asset classes, and who knows how all of it's structured. So to be able to organize that and make it useful, whether a storm chaser or institutionalized investor can come along and then leverage the platform for what their purpose is.
Yeah, and I mean, to just stress how tough it is, for 4 years, we were New York only. So, and part of that was New York data was easier to get a hold of. Mayor Bloomberg had opened up a lot when he was mayor, and it took us a couple years of R&D to just work out how do you expand this to 3,100 counties to describe that. And now it's that same process we do with our data. We apply that to some of the biggest players in commercial real estate with their database and for them to their own databases.
Now you mentioned earlier, and you just kind of referenced it. You started in New York, you moved nationwide, but are you fully available nationwide, or there's still markets you're attempting to develop?
Fully available. So that 54 million properties we say represents 99% of everything outside of a single family home.
Wow.
So, and that's a huge strength for us. If you're in Boise, Idaho, and you haven't had commercial real estate data solutions before.
Yeah. What are you guys then looking beyond the U.S., or you think you'll stay here domestic?
Look, there's definitely an international play there. I think there is so much of a market here in the U.S. that we've got our eyes pretty focused here at the moment. In terms of expanding internationally, the nice thing is that our algorithms work in a similar way that you can do that. The challenge that makes it a little more for us than, say, if you're the Uber for pets or whatever, is that you've got to get hold of different data sets and put that all together there. So look, I think it's definitely part of what we're going to do. It's just there's so much runway in the US right now that we're pretty good. I've been pushing for New Zealand so I can do a few more trips back home, but
it's a smaller country, right? So
yeah, I mean it's about the size of Brooklyn or something. But
you guys should be able to pull that together in a weekend. That's just a hackathon project right there.
One of my friends downstairs in the engineering room, I'll ask him to.
That's hilarious. And you guys now. So Reonomy is only 3 years old, right?
Coming on 6, 5 or 6.
5 or 6. Oh, 5 or 6. Okay. Yeah. Okay. So, you've been able to expand nationwide. You're staying focused. What do you think has been the key to that growth outside of just you running marketing?
There's a lot more than me. I got pretty lucky in my timing. I think, I think a lot of it comes back to product market fit. When I really think of the success and the focus, it's really understanding what is the problem here and being disciplined on that. And, there were times before even I joined, I know that the road wasn't always as clear. I think it's easy to look back and think, the dots connect and this has been a clear road, but there was a lot of testing, a lot of understanding of what do people need. And we found a bit of a sweet spot now of aggregating all this data together. So I think at its core, it comes back to product market fit, listening to the market, understanding what it wants, and then making sure you're getting in front of the right people. And that's probably not the sexiest answer, but these things are pretty simple when you boil it down.
I'm sure you have this discussion all the time. When it comes to marketing, there's really not this secret recipe. It's not this secret that someone undercovered. I mean, yeah, Hotmail had some growth hacks back in the day. Airbnb had some revolutionary growth hacks, but if you get the right product to the right people, it should solve the problem.
Yeah, it really is that. I mean, people hear about these examples and it's almost the death of you as a marketer because the expectations become something. You tell them that you're going to optimize for SEO or something. It definitely doesn't sound as interesting. But you're right. It's build something that people want and get it in front of them.
Now, with that in consideration, what you guys are doing is obviously highly specialized. Yeah. There's not many people who could say, what we're going to do? We're going to go out and quilt together. There we are. I'm putting it in action. We're going to quilt together millions upon millions of data points for millions of properties in the US and make this readily available for big time investors. Do you feel that you guys have been early enough to, probably build quite a bit of moat around what you do in protecting the market share and holding down this service until something fundamentally changes?
Yeah, I do. I think there's a lot we're doing there to build that moat. And it's, I've worked with other startups before. And the thing that excites me most about here almost is it's very tough to get to where we are. It's not like you've got Uber and Lyft building, the same thing there. There's a lot of, there's just simply a lot of data that you potentially other people can't get a hold of. And on top of that, there's when you're talking about algorithms and machine learning, when you move ahead and you're able to, optimize those things and before other people, it builds that moat. But at the same time, we're pretty aware that other people are trying to come in this space, and it motivates us. I'd say we call it a day one mindset. Every day's day one here. So by no means resting on what we've done, but also trying to build that moat, so to speak. And I think that's us being pretty frank about what we do well and we don't do well.
Yeah. No, I think that's pretty healthy. Is there anything that you can share about, in the journey of the last few years that you guys maybe a project or an experiment that you guys attempted or started with that you realize, hey, this is not working, or something that maybe totally failed along the path of growth here?
Yeah, I'm trying to think where to start. Yeah, I think I can probably speak more from the marketing side, side of things, just because that's more, in my realm. I think actually, there's probably a better example now I'm thinking about them. When we first looked to expand out of New York, we thought about doing it city by city. We looked at LA and we thought, let's take what we did in New York, because we've got a pretty tidy business, New York only, New York product. But like you said, New York is the mecca of commercial real estate. And we quickly realized that if we had just went to LA next and then did, Chicago or city by city, that would take us, decades to be able to grow to any size. So there was really a redrawing of the plan, if you like. And we ended up scrapping that plan to go to LA and be like, how do we build this nationwide? And that came with our national offering. So that was a big learning curve. A lot of that happened a little bit before me, some of the key decisions, but the effects of that and the decisions there have been hugely influential in where we went as a company. And I think it built a character around making those tough decisions. But that would be the prime example of where the road's more windy than ever thought.
No, that's good. I appreciate you sharing that. Are you able to say how many current customers and users of the platform you guys have?
I can say it's in the thousands.
In the thousands.
Users.
And you have different tiers though, right?
Yeah. It depends how you slice and dice it as well, because we've got big enterprise deals where there's a lot of end users as well that will buy from corporate. But there's different tiers, and that's based on the degree of information that you want to access.
Got it. One of the things that I've been paying attention to pretty closely recently, really for the better part of the last year, as it just continues to ramp up, is the amount of funding now in the real estate tech space. Now, you had talked about it. You guys have raised nearly $70 million. That was your late stage C, right?
Yeah, C was 30. Yeah, so 70. Yep.
Yeah. And it doesn't look like that's slowing down. It looks like more and more players are warming up to finally realizing, like, oh, wait a minute. We've been investing all this money in these apps. We have to hope those apps quickly, gain market share and we can, exit in a few years. But then there's real estate, and these buildings have been here for 150 years. 80 years, even, or shorter term, and I think people are waking up and realizing, like, man, real estate's likely to be around for a long time. Uh, so, outside of that, I mean, why do you think those are some of my thoughts, but why do you think the amount of funding focused on real estate tech has really ramped up the last few years?
Yeah, I think it's fairly simple. Real estate is the largest asset class by a fair bit. The sheer value that's in real estate is unmatched, and based on that, that when people see how big the market is, people get excited. And now I think what we've started to see in the last few years is the adoption of more and more tech within real estate. I've even noticed it year on year where the industry's heading, and that combined with the core idea of how valuable real estate means that venture capital is just excited by it, and they should be. I mean, when I speak to people like yourself or see what's happening in real estate, I think people that are outside of it don't quite know what we're in store for, and it's going to be huge. I think there's a lot of noise at the moment. I think the fundamentals are strong that real estate is going to be disrupted by technology.
Yeah, I think that's cool. We've gone over quite a few things. I want to get to my favorite segment of the show, but before we jump into that, I did want to open it up for opportunity. If there's anything we haven't yet covered about Reonomy that you feel is most important for people to know, I wanted to give you the opportunity to go ahead and share with that what you think is really important for people to understand about Reonomy.
Sure. Yeah, I think there's probably a couple of things there. I think one is that when you think of commercial real estate and you think of data, they sound like pretty big words, or rather, they sound like they're suited for people in the big offices behind me here in New York. But Reonomy is really trying to democratize the world of data. I know I mentioned it before, and trying to make it accessible to a lot of different people. And I think it's a core part of what the message we're trying to get across, which kind of dovetails into the second part is that we recognize we're not perfect, and we want people to come along with the journey with us. We want to listen to the industry, we want to listen to our customers, and we want them to help us get better and build the solutions that they need. And I think that, that's a core part of who we are. It's different to some startups where they'll be a little more forthright with what they believe and with their customers. And so we're trying to do it in a slightly different way and say, we're on a journey and work together. Because I don't think tech and real estate speak that well together. I think people in real estate with not a lot of tech, and you've got a lot of tech people with not a lot of real estate. So I'm trying to bring that a little closer together.
Tech and real estate don't speak well together. Is that what you said?
Yeah.
Naturally, I think you're right now. Until we get the home operating system dialed in.
Right.
Look, I'm looking forward to that.
Yeah. A lot ahead of us.
All right, we're gonna transition here. We're gonna move into what I like to call For the Future. For the Future is a segment where I get to ask each guest who comes on the show to give their best predictions based on the following 4 questions. Sam, you ready to play?
Let's go.
All right, let's do it. First one. What does Reonomy look like 1 year from now?
Double in size.
I'm sorry, how many users did you say that was again?
We'll be in the tens of thousands of users.
There we go.
Yeah.
All right. Simple and easy. Question number 2. And I know this one isn't directly commercial real estate related, but I think it's still just as important. What will the housing market look like 1 year from now?
Oh, wow, you're getting me to crystal ball gaze here.
That's right.
The housing market will look like a reflection of the wider economic market trends. No, I think.
Well, I mean, in the last week, that's not so good.
Right. I mean, look, it's always a tough one that, but I think, we're going to see some deceleration over the next year. How far it goes is really up. There's too many variables for me to really guess. Week on week, I'm learning so much about this country.
Yeah. Question number 3, when will the next big boom or bust happen in real estate?
I think we're on deceleration. I think we'll see a couple in the next couple of years, a correction on that side of things. So if you want to put that as a bust, you can label that there.
We're going to quote you on it and just make sure everyone says that's what's happening.
New Zealanders, we don't really make strong commitments. We sit on the middle ground, so I'll walk around my words.
It's okay. All right. Question number 4. What's one thing you believe will dramatically change or fade away in real estate as a result of technological advances?
It's an easy one. I'm going to give a pretty straight answer here. But I think, the democratization of information, I think the scale of which is going to change it. People's advantage is no longer going to be who they know and the information. It's going to be about this quality of service and insights they provide. And I think it's going to be huge.
Yeah. That is awesome. Now we're going to move into the final segment of the show. These are the last 3. Sam, these are questions a little bit more focused on you personally. Very interested in this. First one, what are you reading?
I am currently reading Shoe Dog, Phil Knight's autobiography.
A book of hustle before hustle was a thing.
Yeah, it's a good read.
You know what's so amazing to me about that book, if we can talk about that for half a minute, is when he's talking about, for those of you who haven't read it, spoiler alerts coming in, but you should go read it.
Yeah.
But, when he's sharing about the bank being upset with him because he didn't have cash flow.
Yeah.
They wanted him to be cash rich. And I'm like, man, could not be any more different than a lot of business today. I mean, yeah, they want to see some cash. They just want to know, what are the projections? Okay, it looks like you're doing good. Let's just keep giving you leverage. I just wonder what the next, how will we look at, our current time, about 10 years prior up till now, 30 years from now, how are we going to look back at this time period, and what will the business changes be to how we operate?
They might look at us as crazy and say how much.
They'll be making so many smart decisions on their underwriting with commercial properties due to Reonomy that they'll just be like, how do they do business prior?
It's already happening.
All right. Question number 2 of the last 3 here. Who are you learning from?
Who am I learning from? This is a great question. I think, I learn a lot from our CEO here. Rich Sarkis, he's led this company through a lot of different variations, and he's someone that I learn off a lot. And he's scaled this company from himself to 60 plus, and will probably be 100 plus people next year. So,
wow,
you learn a lot of that when you've got to scale your own team of people as well.
Yeah, quick plug for Reonomy. They are hiring. Saw many positions there on the website.
Yeah.
And the last one, what inspires you, or what keeps you inspired?
It's kind of a simple one, but I think, family. I'm a big family guy, despite living across the other side of the world. But you come from a long line of people that were 9th generation fishermen, so they've inspired me on the work ethic side, and always to keep hustling. Yeah.
Sam, this has been awesome. I've already learned a little bit more about Reonomy than what I knew. And now I'm even more interested actually in the platform than I was previously. I think you guys are doing some really cool stuff. Obviously we need to clean up the data to clean up the industry, I think. And you guys are paving the way for that. Before we head out though, I want to give people an opportunity if they want to connect with you, and or dig in and learn more about Reonomy. How can they do that, and where are the best places to do that at?
Yeah, so probably 2 parts in general following Reonomy. We're putting out a lot of good content. We're building out a content team there. So You can go to Reonomy. You can read all our content there, as well as following Reonomy across, all your usual social media platforms. Myself, just really focusing as a marketer on building out LinkedIn. I've got pretty big predictions on where that's going to go. So if you want to connect and you want to see what I'm thinking at the moment, feel free to connect with me on LinkedIn, and we'll share my thoughts there.
Awesome. Well, thanks so much for your time, Sam. Really appreciate you joining us for the show, sharing all about Reonomy, giving us your crystal ball predictions. And I can't wait to check back in with you in 1 year from now to see if everything's true.
Yeah, my hazy crystal ball. But no, appreciate you having me on the podcast. It was a lot of fun, and hopefully this doesn't need subtitles.
No, we're all good. All right, we'll catch you next time.
Thanks.
Well, that's it for today. Thanks so much for listening to the TechNest podcast. Hey, don't forget you can get on the email list so you never miss an upcoming episode. That's technest.io. That's technest.io. Get on the email list. Go to the App Store, whether you found us on iTunes, Stitcher, SoundCloud, wherever you found us. Leave us a 5-star review and share it with your friends. And if you've got a guest or someone that you'd like to recommend, or if you think that you'd be a great guest on the show, hey, send me an email, nate@realteampanda.com. That's nate@realteampanda.com. See you guys later.